TTM Trades, welcome back. Want to record a video. I think it's been about a week or two since I've recorded one. My last post, I said I'm just not interested in these price levels. I said there is a strong possibility that we're going to push 400, but Treasury yields are rising, a lot of divergence, et cetera, et cetera. And I thought we would get like this M-top pattern here, but clearly it just completely ripped straight through that area and pretty much gapped up and went straight through. Okay. Hold on one sec. So the M-top pattern is out of the window. So where do we stand now? All right. We are on a very strong intraday uptrend. All right. And again, with what is that key support level? Again, the weekly chart, top one standard deviation Bollinger Band, which is now currently sitting at 390. Okay. We've been talking about this support level since back here when we dipped down to 368. And we talked about it when we dipped down to 380. Then we talked about it on the 385 pullback into the current rally that we're sitting in right now. Okay. So, I watch a lot of other YouTubers and things like that, and I'm seeing a lot of videos about market meltdown, correction, et cetera, et cetera. But we're going to stick to the technicals and ignore the noise until we violate this top one standard deviation Bollinger Band on the weekly chart. We will continue to play the intraday trends, which are currently pointing to an uptrend, and we will play it as such. So right now, 390 is the key level of support on the weekly. Now, sliding the daily to the right, and pulling the 2-hour chart up to the left. Now we talked about this in many posts. We said that key level support was 385, and that's the level that we wanted to watch. And we followed our signals here on the 2-hour chart, where we took this initial downtrend once we seen the RSI fail and the PMO starting to flatten out and curl down. And we took this initial downtrend down to 385. Now, right here at 385, we hit that support level and we begin to rally, which is right here, 385. Bam. You'll see that correlate with the dailies, bottom one standard deviation, right where we hit before we reverse and went on this monster of an intraday uptrend. All right, now sliding the daily out the way, bringing a 2-hour to the right and 30 minutes to the left. We're still in a strong uptrend. Now, I said I wasn't interested in these price levels. I did miss a majority of this leg, and I kind of beat myself up a little bit because I kind of ignored my signals, and I just kind of psyched myself out that we were not going to have this crazy of a run up. It was very unexpected. So we took the initial downtrend play here on the 30-minute chart once we got the signal. Once that PMO started showing intraday on a 30-minute chart that the overall uptrend intraday was slowing down, we went ahead and took puts right here back in that 395 to 396 area. And then we took those puts all the way down to the 385. Made some good profit on those puts. As you can see, that correlates right here with the 2-hour chart. To the 385, excuse me. We knew 385 was a key level of support. Soon we hit that 385. I did not chase it. Okay. Once we actually got back above this 150 SMA right here, I was thinking about going long, and then we pulled back right here and consolidated. I was going to take a position, and then once we broke out, I was still too hesitant about chasing this, and then this leg just continued to go non-stop. Now, do I think we're kind of topping out right now? There's a possibility that we could be topping out here right at 407, give or take to 408. All right. But again, the overall intraday trend is still very strong, and it's a lot of momentum behind this move. As you can see, the PMO is still trending upwards. It's in bull territory, hence the green background. And it is above its short-term and long-term average. So again, each one of these small pullbacks here, again, I smooth the PMO all the way out so it ignores these small moves like this. You see how the RSI reacts to every last one of these little moves, and you get these movements in the RSI. I'll smooth the PMO all the way out. So that way, all it does is it tracks the trend. All I want to see is the trend, and I utilize the RSI to find my intraday entries and things of that nature. But just looking at this on the 30-minute chart, this intraday trend is still very strong, okay? It's starting to round out here, like we said, at 408. And you can see here, even on the 2-hour chart, 30-minute chart builds into the 2-hour chart. It's starting to round out here a little bit again at that 407 or 408. All right. Um, so I would not go short just yet. Okay, again, I always look for the momentum to slow down completely and then for us to kind of move sideways to show that the top is consolidating and then for a break of momentum to the downside. And then I like to see that this upward momentum consolidates, which is it is starting to do. As you can see here, as we was breaking out, price action is very volatile. That volatility picking up. And now the price action is kind of moving sideways to where now the Bollinger Band width is falling below its average, as you can see here, showing that we are going into a consolidation pattern. Now, two things can happen as we go into this consolidation pattern sitting here at 406, okay? We can either break back out to the upside to push 410 to 415 is very possible, or we can consolidate here, and as the momentum begins to subside, we could break back down and come back down to test 395, okay? And I would say 395, give or take, back down to 390 to 391, possibly. Okay, now that 390 to 391 is pretty dramatic, but it is possible. Okay, so right now I would just wait to see. Now, if you're looking at going short, then what you want to see intraday is you want to see what has been support levels now become resistance. And what I mean by that, any trend that is in a strong uptrend, if you've been following my videos, top one standard deviation and the middle Bollinger Band will act as support in a strong uptrend. So as you can see here, downtrend, finally broke out of that downtrend, coming out of that bottom one standard deviation, hitting that support, and then we broke out to the upside. As you can see, uptrend, pullback. My wife is calling. Hold on. All right, I'm back. So as you can see, as we pull back that middle BB support, break back out to the upside for another leg, pull back. Again, another breakout to the upside. And each time we're using that top one standard deviation and that middle Bollinger Band as key levels of support. Now, what you want to see to identify if we're going to break back down to the downside, you want to see what was acting as support now become resistance. So first, you want to see that we break this 405 level and we pull down to the 403 level. All right. If we get a bounce off the 403 level, you want to now see 405 and 407 and 408 become resistance. If the price action starts getting rejected at that 405 to 408 level, and the momentum is consistently slowing down with the price action consolidating, and we start to see the PMO crossover, which I will post another video if the PMO crosses over, then we'll look at taking puts to take this back down to the downside to better position ourselves for another leg up, possibly. Okay. Um, but right now, intraday, the price action is consolidating. We could see a potential pullback here. Okay. Now, if we never violate this 403 and get below this bottom one standard deviation Bollinger Band, and we just kind of hit that 403 and get a bounce, we could continue to the upside. We're in a very neutral spot right now as far as which way the market wants to go. But again, you want to see that 405 to 407, 405 to 408 range become resistance before you take a short position. Now, again, the 30-minute chart is going to build into the 2-hour chart, right? 30-minute candlesticks, 4 30-minute candlesticks that'll give us a 2-hour candlestick here. So as you see the price action consolidating in detail in the 30-minute chart, you're starting to see that build on the 2-hour chart. Again, a 403 is a key level of support we want to violate, again, which on the 30-minute chart is the bottom one standard deviation. And on the 2-hour chart is the top one standard deviation, which will take us out of this uptrend for a temporary pullback. Because as you can see here on the 2-hour chart, we break out, top one standard support, breakout, pullback, support, and then we start this nice strong leg up. So again, we violate 403 intraday, then this will give us an opportunity to pull back down to that 395 to 400 level, which would be the 2-hour charts, bottom one standard deviation, and middle Bollinger Band back down in this area. Now, depending on, again, if we do see this consolidate, I will take puts, as I did miss this monstrous of a leg to the upside. We'll take puts back down to the downside, look to hit these key levels of support with some consolidation, and then we'll take calls back to the upside if the chart setup is correct. All right. So intraday, we are kind of in a neutral spot. Now, what I have been trading, just to kind of go off track for a quick second, is I'm starting to see bonds are picking up. All right. And they still need more time to develop. But again, this goes into the overall bigger picture. So I took positions in the 20-year bonds. And as you can see here, bonds have been on a monstrous downtrend, right? As bonds have been dropping, interest rates have been picking up, right? Vice versa. Interest rates are rising, bonds are dropping. All right. So interest rates on a weekly chart have hit a key level of support, key level of resistance, sitting right at the 150 SMA. So I do think we'll have a temporary pullback as far as the interest rates will pull back. And as the interest rates pull back, bonds will probably get a small temporary rally to the upside. So I did take a position in bonds. But looking at the overall bigger picture, all right, if bonds, which you see here on the weekly chart, on a week-to-week candlestick, is hit the 150 SMA. If we do consolidate right around this 150 SMA, which is what I'm watching for, and we start to see bonds on a day-to-day basis, as you can see here, which has been on this monstrous downtrend since July of 2020. It's been on this downtrend, and every time I tried to rally, it's getting rejected by that top one standard deviation, not allowing the as you can see here with the bonds, they've been rallying, trying to break out of this downtrend. And each time it hits the top one standard deviation, the price action gets rejected. And then it just continues on this monstrous downtrend. As you can see, it is below the bottom one standard deviation. Now we can see the price action has kind of hit a bottom here on the day-to-day chart, which correlates with the 150 SMA on the weekly chart. And we can see a nice little spike of volume in this area. All right. Now, if bonds consolidate right here and we break above this 140 area, which is that top one standard deviation, if we break above this top one standard deviation, pull back and hit that as support and start to rally off of it, that's going to give me a huge signal as far as the market and if we could possibly be preparing to go into some type of correction, because then this will show that investors are moving to more safer assets such as bonds, and they're positioning themselves in bonds while they're at the bottom, and they're starting to exit a lot of the risk on assets in the S&P 500, which then you would possibly start to see the S&P 500 as investors exit their risk on positions. You'll start to see the S&P 500 pull back, and then we might have that dramatic correction that everybody is waiting for or has been talking about. But again, this top one standard deviation on the weekly chart, until that is violated, currently sitting at 390 to 391. I won't really be yelling that we're going into any type of correction and or downtrend. I would just continue to play these intraday swings on the daily chart, which is correlating with the daily Bollinger Bands. As you can see, they are holding up pretty well. So TTM trades till next time. Oh, one last thing I did want to point out, even though on the daily, we did have this monstrous of a rally here on the daily chart, the PMO, which has crossed over, is not back above its short-term and long-term averages. Okay, so if we do start to see an intraday pullback on the 2-hour chart, something dramatic, and we don't see the daily's PMO fully recover, and it pushes up into these short-term averages and then gets rejected and starts lower, we start to see the PMO creating lower lows, then we know that the overall strength of this trend on a day-to-day basis is beginning to weaken, and we should start looking at possibly taking a bigger position to the downside. But again, TTM trades 390 is that key level support we want to watch before we start even yelling that we're going into a major correction. Intraday, the trend is very strong. We're currently sitting at a neutral position from 407 or 408. We would like to see that 405 to 408 become resistance. And if that happens, then we'll start looking at locking in puts to have an intraday pullback and take that back down to the downside, possibly right around that 391 to 398 to 395 a level, and then possibly from there seeing if we can lock in some calls to possibly take the next leg higher on the S&P 500. But TTM trades, till next time, I'm out. Any questions, leave them in a comment and I'll be sure to get back